Have you ever heard of markup? Markup is the money that a store adds to the cost of the items that it sells in order for the store to make a profit. Let's take a look at how percentages are used in calculating a store's markup. Let's say that we have a grocery store that has a 20% markup on a can of soup. The can of soup costs the store $1.25. That's how much it's going to cost the store to purchase the soup to sell it to its customers. Let's calculate the markup. Remember, it says that there's a 20% markup. Well, we need to figure out what is 20% of the cost of the can of soup. So we are going to be doing percent of a number. So 20%, I'm going to change that to a decimal. Here's the decimal point. We're going to back it up, take off that percent. So 20% can be written as 0.2 or 0.20. Of means to multiply, and then $1.25. Let's figure out what is 20% of $1.25. What is the 20% that the store is going to charge its customers? So use your calculator, 0.20 times $1.25, and your calculator is going to say 0.25. That's the markup. Now this is just cents. 25 cents. That's the markup that the store is going to charge its customers so that it can make a profit by selling that can of soup. Well, with the markup included, how much will the store charge its customers for each can of soup? So when the store puts these cans of soup out onto the shelves, what are they going to charge the customers? Well, remember, the store paid $1.25 for the can of soup, but they're going to mark it up 20%, which was that 25 cents. So we want to add on the 25 cents that the store is going to charge extra of its customers. So with markup, we want to add it on. Now, when the store puts the can of soup onto the shelf to sell it to its customers, how much money are they going to charge? Well, $1.25 and 25 cents together would make $1.50. Those cans of soup are going to go on the shelf at $1.50 each. This way, the store is going to make a little bit of profit off of selling the can of soup. And that profit that they make is called markup. Let's take a look at commission. What is commission? Have you ever heard of it? Well, commission is money that's paid to an employee, usually for selling a certain amount of goods or services. Sometimes commission can be the only money that a person gets paid, or sometimes it can be additional to whatever the person makes, whether it's a salary or an hourly pay. But it's money that gets paid to an employee. Let's take a look at an example of how percentage is used to calculate commission. Martha makes a 12% commission on all of her clothing sales. This month, she sold $9,587.42 worth of clothes. We are asked to calculate the commission that she will make this month. Now, commission is a percent of your sales. It's money that you make. She's going to make 12% commission on all of this $9,587. So this is the same as calculating percent of a number. What is 12% of the amount of clothing sales that Martha made? Well, let's change 12% into a decimal. So here's the decimal point at the end. Back it up, take off the percent. So let's find 12%. Of means multiply her sales. Remember, her sales were valued at $9,587.42. So what is 12% of that? That's the money that the store is going to pay Martha for selling those clothes. This is often used as an incentive for employees to go above and beyond and do a really, really great job. So let's type this into our calculator. Go ahead and push equals. Remember, this is money, so I'm going to add a dollar sign. I'm getting $1,150. And then money goes out 2 decimal places. So I think if we look at our calculator, we're going to have to round that at 49 cents. So this would be the amount of money that Martha would make for selling that many clothes or that much money worth of clothes.